Hey guys, Paul Ezel, the virtual investor, and today I'm going to get into 5 really good markets that would be great to invest in for the rest of 2021 into 2022. All right, before I dive into it, make sure you guys click on the subscribe button, hit the like button, and click on the bell icon so you can get notified whenever we have new videos coming. All right, so I'm going to do a quick screen share here. This is an article from Roofstock. For those of you who don't know what Roofstock is, if anybody's looking to get into virtual investing and wants to do the BRRRR strategy, the buy, renovate, rent, and refinance strategy, Roofstock is a great company you can use to sell your properties. They charge 3%. They get half, they get 3% based on the buyer's listing fee, the buyer's agent fee to sell these properties for you. So, and in a lot of different markets, you can get greater than market value when you're going to resell these things. For instance, a friend of mine who is in St. Louis, he does a lot of these renovations here, rents them out and sells them, 10, 15, 20, 30% above market value. So you could definitely do that with a company like Roofstock because people are looking for cash flow. They're looking for the cap rate. They're looking for a certain amount each month. And so they're willing to overpay to have everything set up for them where it's nice and simple. So let's go over their top 10 markets over the past 18 months. And then I'm going to hit my top 5 basically out of this. All right, so their number 1 is Vegas. And I personally would steer clear of Vegas, but I get why it's number 1 because of the growth they've had here, and the rent growth has been tremendous recently. And a lot of this just has to do with a lot of people moving out of California and going to Nevada, going from a high tax state to a lower tax state. But you will see this eventually slow, but over the next year or two, probably still gonna be good to invest in Vegas. But remember, Vegas is a market that tends to get slammed when a real estate market turns. So that's something to think about. Orlando, number 2. Orlando is always a good market. Kind of no matter what, it does get hit harder, obviously, just like Vegas, not as bad when the markets turn, when real estate markets turn, when economy turns. Something to think about there. Atlanta, always a good market to be in, but it's becoming, I feel, it's becoming a little bit overpriced. So you're going to have to go out in the suburbs of Atlanta. Go out to Macon, Georgia, where you could really get some good cash flow properties out there. Charlotte is a great market. It's been a great market and growing since the 1980s. So one I would definitely recommend, and areas, within an hour or two outside of Charlotte, like Kannapolis is a great area. Gastonia, great areas to do fix and flips in, and to do buy and holds in, and to do owner financing in as well. All right, then you go to Phoenix. Again, Phoenix is another one that gets overpriced, just kind of like California, Vegas, parts of Florida, especially Miami, comparable. So I do think you have a couple of factors going on here, though. You have a lot of people moving out of California to Phoenix. So that's going to continue over the next few years. So I think it'd be pretty stable. There's good jobs in that market, lower income tax by a ton, and good quality of life there. So a lot of people are moving there. A lot of snowbirds go down there, obviously during the winter as well, between Florida and Arizona. Those are your 2 big hubs for snowbirds coming down. A lot of Canadians come down here as well and have second homes. Then you got Dallas-Fortworth, which I love all the time. And this is a market that will not get slammed nearly as bad as other markets will when real estate turns, just because the amount of job growth, the amount of businesses in the Dallas-Fort Worth area. And Fort Worth is going to be a little less expensive for you than Dallas. Another little market that's about an hour and a half away from Dallas I love is Waco, Texas. Not as competitive, but a great market in which you can do buy and hold, owner finance, and fix and flip. You can use every strategy in that market. It's a tremendous market. And we'll go in another one of my favorite markets, Jacksonville, Florida. And since hedge funds have kind of started to move away from here, it's become a much better market to go into. And you can do a combination, just kind of like Waco, Texas. You can do a combination of buy and hold, fix and flip, and owner finance. I've done a mixture of everything in there except for the buy and hold. I've done the owner finance, I've done fix and flip in Jacksonville, done very well over the years. San Antonio, Texas, what a hot market this one is. Kind of like the Dallas-Fort Worth area, tremendous growth, job growth, great place to live, all kinds of good restaurants and shopping. So it's definitely one area I'd highly recommend, but it's becoming a bit overpriced. So keep that in mind. It's great fix and flip market, getting tougher. It used to be a great buy and hold, getting a little tougher to buy and hold in this market. Same with the owner financing. Now I'll go to a market that's always been steady throughout time. it's a linear market, meaning that it stays very stable. It's not the up and down cyclical market like you have with a Fort Lauderdale, that you'll have with a Las Vegas, that you'll have with a Phoenix. These are markets that are cyclical, up and down, whereas Indianapolis is very linear. It's going to stay a slow, steady growth. Great rental market, great owner finance market, and definitely a great area where you could do some fix and flips too. But a great long-term buy and hold, affordable place to live, affordable taxes, good lifestyle. It's definitely a great market to be in. And they have number 10, Fort Lauderdale. And I've seen it. It's great for rentals. You could do well with the rental market there. You can do tremendous with the fix and flip as well. But again, this market, think like Las Vegas, think of Miami, think of Phoenix, more of a cyclical market. So as the market turns, you're going to get hit harder here than you will in Indianapolis or in Cincinnati, Ohio, some of these Kansas City, St. Louis. You won't get hit as hard in those markets as you will in a cyclical market. So just something to think of. My 5 personal favorite markets. You got Indianapolis, which has had 12.8% growth over the past year. Price increase, that is, and 4.1% increase in rent values. That's huge. Then you got Raleigh, North Carolina. One of the reasons I like it, because I think it's a great long-term think, buy, hold 5 to 10 years. It's the new Silicon Valley of the East, Southeast area. And it's got tremendous growth going on there. A lot of millennials moving there for jobs. So it's going to have good growth over the years, good rental income. And just think of appreciation, where you'll be able to sell this property, hopefully 5, 10 years down the road, and make a nice little profit if you choose to sell it. Another one is Nashville, Tennessee. Again, it's growing tremendously. A lot of job growth in there. And another zero income tax states. One of the things you'll see, the growth where people are moving, all zero income tax states. They have one thing in common, right? Nobody's moving to the Northeast. Jobs are fleeing the Northeast. They're going to zero income tax and lower cost of living areas. Another one, obviously Dallas-Fortworth. I like them a lot. You can put Waco in with that as well. And Jacksonville, Florida. Those are probably 5 of my favorite markets, I think, going into 2022. And hopefully this helps you guys. Hopefully you got something good from this. Again, this is Roofstock's article that's out here. This is from June. I just pulled this one up here. It's great base to go off of. And it has 18 months worth of history. So that's very, very good. But remember, it's going to change. Things are shifting. Look at numbers, look at demographics, because it's going to change even a little bit more going into 2022. I think it'd be fairly safe in some of these linear markets and some of the markets I talked about. Hopefully you guys got a lot out of this, and we will catch you on the next video.